Hi friends, in this video I'm going to show you how to analyze market without the need of much of backdated data. Because when we believe that, we will be going into a sort of bias, like this land could be a potential support zone or resistance zone or kind of many other things. Rather, we just watch the price, how it is behaving, how are sellers going to do, how are buyers going to do, who are going to win at what critical levels, and then we take some sort of line work. If the context and line work is matching, then we enter a trade. So that is the mantra of price action strategy. Now, with that information, let us analyze the market today. I'm going to be explaining this in greater detail, so I request you to keep your interest and watch this video till the end, so that by the end of this video you'll get some phenomenal information which would help you take positions with a very precision and greater risk to reward ratio. Now, with that note, let us start this analysis. I'm going to go candle by candle to help you to help illustrate how we analyze price and then take calls. So price has opened here in the this is Bank Nifty 5 minute chart, guys. By the way, on 16th September, the day opened with a gap down, and the latest candle has shown some great fight between sellers and buyers with this candle. And let us see how price behaves further. So we don't use much of backdated information. Hardly we use is last 50 to 100 candles if at all is required. So the lines I have marked here are clearly indicating the latest demand zone now turning into resistance zone. Should we enter any short trade here? Probably not, because we don't know if price may go one more move up and we'll be hitting our stop loss. Should we enter any call push at this level because of this breakout at this level? Probably not, because if we enter any call position, the stop loss is too much and you will be very frustrated if price goes down. So rather than going into impulsive trading, we just wait and watch and see how price behaves further. So price has closed below this candle, this lowest low, indicating that sellers are dominant at this level. Okay, I am marking the latest candle highs and lows because this is the low that is acting. This is the latest candle that is acting high of this candle, acting as no resistance. I am also marking some zones here, which could be interpreted as supply demand zones. This is the latest demand supply zone from where sellers have fallen sharply, and then see how price behaves further. Should we enter short trade here because of the breakout? Probably not. Again, because our stop loss is too high and we don't know how much the price is going to go down. So we should rather wait and watch and observe how price is going to behave. So surely whoever have entered short position at this level with buy stop positions would have certainly become frustrated with this move. So what do you understand by these moves, guys? Price neither moved up nor moved down, rather wiped out both the levels. So this means that there is clear manipulation happening at the highs and lows of this first candle. So we have to wait and watch what we can do. The one point that we can note here is that sellers are too powerful to close below this level, and then if price reaches this zone again, probably we can enter short positions. But that again have to align with our context at that level and line work as well. Let us see how price behaves further. Price reached our supply zone and then created a temporary stop with the inside candle. This is certainly a valid a point to enter short at this level with the stop loss above this level, high at this candle and the target below this level. But we also have to align our context with some line work. So if I draw a pitchfork with the latest highs and lows, okay, this is the latest high, low, high, and low. So I don't see any line respecting the midline of this pitchfork. Even if I shift the pitchfork to the latest lows, I do not see any line of matching. So I rather wait and watch. I did not enter any call position or sell position. So price at this zone has indeed some sellers available and they are trying to push the market down. However, the minor flow available at this level are from buyers are not allowing price to close below this level. Should we enter buy call at this level with the stop loss below this candle? It's again too far because we don't know how much price is behaving and again we have very strong sellers at this level. So we should rather wait and watch. This time, price has broken deep into a supply zone and is respecting at the top edge of this supply zone. And immediately after that, there is a steep fall of sellers showing their dominance, but they are unable to close below this low market here. And then prices move up. So, what do you mean, guys? And what can you infer from this zone? Price has trusted both the zones I'm talking about buyer point of view. From buyer level, the buyer point of view, price has tested this lower supply zone and higher supply zone. It succeeded in higher supply zone with a move up, and it also created two solid structures in this zone. So that is buyers at this level are too adamant. However, sellers in this zone, whenever they are touching this, a lower line and higher line, are pushing market very dominantly. Look at the, the volatility between this vector and this vector. This vector took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to move up, and this vector took only 1, 2, 3 candles to come down. So, who are still stronger in this level? Certainly sellers. But the buyers are showing their aggression with higher highs and each high closing below the latest low. So, we are still not sure if who is going to win, and we are just waiting and watching if how the price is going to behave. To add some line book, what we did is we have created a slope frequency line and then extrapolated that line to the latest vector. So this line is being respected at this level. So we have multiple lines catching at the very point of interest to us and then the price moved down. So I think this is some very important call that we have to understand. Now when I shift this price again, the line is being respected at the bottom level. And let us see how price behaves further. Did you observe anything very interesting thing here? Buyers from this level are unable to close this, enter into this zone for the first time. Second time they entered and then fallen down. Third time they tried to enter and then fallen down. And fourth time they are entering. That means there is something suspicious at this level. That means if they are unable to enter the third time, how could they enter again on the fourth time with such a strong bearish, bullish candle? So that gives us an impression that there are indeed some market makers available at this level who are trying to believe retail traders that market is going to go up. When such strong, powerful, bullish candle appear with a strong resistance at this level, what do you and I think as a retail trader? Certainly going long with a stop loss below this low. Yes or no? However, that is how we should not interpret it because the market makers want us to believe that way. We take it in exact opposite direction. We are going to believe that market is going to fall from this level. I'll show you how. Can you bring out some great line work here? If I connect with the latest highs at this level, market is respecting the outward frequency and then creating a strong inside candle. That means this is the last move by market makers to enter many retail traders into call positions, and then there is an immediate stop, immediate inside candle. There's a temporary stop in price. So this is when we have entered into short position exactly at the close of this candle, and this is powerful knowledge because we need to know what we want to believe is not right always. What we are made to believe like this by some great, powerful market makers who are invisible in this chart. Now, they have already assumed their short position at this level and they are going to take the market down. How do we enter target, how do we, now that we have identified that this is going to be a market edge, how do we enter target? Simple. All we have to do is we have to do a pitchfork with the latest highs, lows, and then put this last pivot to this line because this is going to be a market edge. Now the midline of this pitchfork has already been tested at this level and then created a higher high. So I believe that this line is going to be a target for us. Now to add more context to this line work, let us also bring in some sort of geometry. What is the latest low you can see here, guys, in this chart? The previous day's low, this one. So when I connect this low to this low, I am a bit surprised to see that this low is being respected multiple times, and this candle and this candle. First time the buyers are unable to move further, but second time they have definitely failed. Even they have even been able to close above this level, and sellers taking their positions in the opposite trend. Now when I extrapolate this into the latest high, okay, price is not respecting this level. However, if I put this low at the latest low, okay, price indeed has some frequency being respected at the outline of this pitchfork, and when price touch this level, price has created an inside bar. So this gives us an indication that yes, this is going to be a market edge. Now let us see how price unfolds further. The slope line of this frequency is our target. Price hit exactly our midline and then moved further to touch again this level, and then it has reversed. Did you see the amazing ability of analyzing the relationship between buyers and sellers that we have identified in this job? So this is how you have to analyze price, guys. This will help you take trades with almost how much? I'll show you risk to reward ratio. This is when we enter the trade at the very close of this candle, and the stop loss a few pips above this high, and the reward ratio is when the price touches this level. Okay, so that is giving us at least 1 is to 3.32 risk reward ratio. That is phenomenal. This is the kind of trades you have to enter, guys, because they are going to grow your market. However, price even closed below and then went to reach up to this level. So if you might have still hold your now, you should have got a risk to reward ratio of 1 is to 4.51. This is how we have to analyze, guys, the price. If you are interested to know these techniques in greater detail, please ping me in person. I'll be a glad person to include you in one of my courses on price action strategy. We also train on market maker strategy, because in market maker strategy we don't use much of these techniques. This is rather a different way approach that we enter positions without much of the line work as well. That's probably much easiest way to enter or exit markets. And we also train on Newton's strategy based on Newton's first law, second law, and third law. We also use fractal flow strategy. We use divergences between relative strength index in context of market, in context of price, and then take positions. So there are multiple ways we have analyzed this price. In this video, I have not explained much of them because this is beyond the scope of this video. If you are interested to learn these techniques, please ping me. Thank you.